So it's been a pretty fiercely fought policy area already. I spoke to the Assistant Treasurer, Stephen Jones, a short time ago about whether or not this is a broken promise. Stephen Jones, thanks for your time. So the PM was clear before the election, no changes to tax on super. There will be changes in the budget coming up. Can you see why voters would think this is a broken promise?
Well, to be clear, the Prime Minister said there'd be no major changes, and this is not a major change, to be frank. It's about system integrity as much as anything, ensuring that superannuation is for the purpose of retirement income, not for tax minimisation, not for estate planning. We think $3 million is about the reasonable level at which taxpayers through the budget should be subsidising retirement income. Even above $3 million, it's still a concessional tax rate in there for most tax earners, for most taxpayers. So we think the balance is right. This is about system integrity. It's a modest change. We know there's opposition to it from the coalition. They're saying something different now to what they said a few years ago, but we think it's the right thing to do. $1 trillion worth of debt and a structural deficit. We need to put the system on all fours.
He didn't say no major changes. He said no changes.
Well, clearly we had announced a bunch of changes in the superannuation system throughout the course of the election campaign. One that we'd have, but one about the objectives of super, from which this conversation emerges. And let's not forget, on Monday last week, when Jim launched the discussion paper on the objectives of super, this is where this conversation has emerged from. So, look, I know there's people out there who want to take political pot shots on us. We're about doing the right thing. Right thing by the budget, right thing by the superannuation system. We're strong on ensuring that we preserve it well into the future.
Right. But what you're saying is because there were changes afoot already, that sort of left you wriggle room to make more changes? Because the PM seemed to indicate yesterday this was about timing. It's not a broken promise because it takes effect after the election.
Well, clearly it does. Clearly it does take effect, and it's not a major change. Both of those things are true. This is a change which affects about 0.5%, about 80,000 superannuation accounts around the country. The vast majority of Australians today are retiring with about $150,000, a long way short of $3 million, and a long way short of the $100 million and $400 million accounts, which frankly are there to take advantage of the very generous tax concessions inside the system. They're not there for retirement income, and nobody can argue that.
One of the interesting things has been to sort of figure out what Labor considers an election promise. So, say stage 3 tax cuts, if any changes were made to them, would that be a broken promise?
Look, I think the Prime Minister has made the government's position pretty clear on that in the lead up to the October budget. I don't tend to rehash that.
That has been clear. I'm just trying to assess what a broken promise is. If anything would change for that, because it kicks in the middle of next year. If anything changes, would that be a broken promise?
Again, Tom, I'm not going to get into hypotheticals that we aren't even considering. Let's focus on the things that we are considering. We've got a $50 billion structural deficit in the budget. We've got to rein that in. We've got $1 trillion worth of debt. We've got to pay that back. This is what we're focused on. It's going to be a tough budget. There's no doubt about it in May.
Okay.
There'll be spending cuts. There'll be things that we have to do to ensure that we bring the budget onto a sustainable footing.
Okay.
And measures like this are directed at that. But more than anything, they're about the integrity of the superannuation system.
It's not indexed. Now, this was mentioned specifically by the Treasurer and the PM to make it super more sustainable. So the 80,000 people affected, how many will that be in 5 years or 10 years?
Oh, look, I can't give you the number off the top of my head, but what we still know, Tom, we still know that it's less than 1%, more like 0.5% of Australian funds, of Australians who will be affected by this with superannuation. And it is about sustainability of the system overall. To be honest, we're more focused on ensuring that those people who are retiring with very, very modest super in their retirement income get access to the benefits of superannuation, which is about ensuring that the superannuation guarantee levy goes to 12%. It's about ensuring that funds are well performing. And yes, it's about ensuring that very generous tax concessions are targeted where they need to be.
But when that 80,000, that won't be 80,000 or 0.5% in 5 years or 10 years. Will you get that figure modelled? Because that changes every single year because it's not indexed.
There's a bunch of things that we're going through a consultation phase on this, and one of the reasons why It's a 2025 implementation date, is so that we can get and work through the details of these things, Tom. So,
but that doesn't
there's
need to be in
opportunity.
I'm just asking about what Australian voters will find out about it. Will you let us know how many it scoops up in 5 years, 10 years, even 20 years?
Look, I think overwhelmingly Australians with a superannuation balance of around about $150,000 are pretty clear that this has nothing to do with them. $3 million. $3 million is well above, well above where the average Australian sits. But the consequence of not sorting this out means we have a superannuation system down the track which collapses under its own weight. We want to put it on a sustainable footing, and that's what we're doing through this measure.
But again, with no indexation at all, because you could have said, oh, we'll begin indexing it in 10 years. With no date at all, it implies this is a set and forget. So rather than just tell us who's affected in year 1, will we be told who's affected in year 5, year 10, year 20?
Again, it'll be the same proportion of taxpayers that are the same proportion of superannuation funds. It's about 0.5%
hang
at the
on.
moment.
In 10 years, there'll be the same proportion.
Sure. I know the question you're getting at, and we're focused on...
No, I understand that,
we've
but
got
with inflation, that's not going to be the case, is it?
Yeah, I get the point you're making, and yes, it'll be affected by inflation. It'll also be affected by fund performance. It'll also be affected by behaviour, and indeed, one of the reasons why we're doing this and signalling a long implementation phase is so that Australians can make adjustments now and they can plan for their future. So a long implementation of this means that people can say, right, well, if I'm juggling my finances now and I want to work out how much I put in super and how much if I've, been lucky enough to have other savings or other assets, how much I put elsewhere, they can make decisions around where those generous superannuation taxation, generous superannuation taxation concessions are going to cut out.
That's something you could get Treasurer to whip up, I'm sure. A few boffins in there could.
One of the reasons we've got a long implementation phase
to get that sort of
is to get all of these, to look through all the consequences of these. There'll be some unintended stuff that we need to work through, consult with people on, and that's exactly what we'll be doing.